All right. All right, ladies and gentlemen, a very good morning to everyone watching us live. Good morning. Welcome back to the trading room. It's 3 minutes after 9:30. Welcome back, everyone. Thank you for joining us. It's a Friday. It's a Friday. Definitely. Let's finish the week strong. All right. Let's finish the week strong. Welcome back, everyone. Baticles, Tanya. We've got Robert. We've got AV Trader, Intel V Pro. Welcome, guys. Welcome. I hope that everyone is well this Friday morning. Yeah, I just had my coffee now. I just had my coffee. We are ready to rock and roll. Yeah. Right. Let me just confirm a couple of things. I believe my sound is good. I believe everything is good on my end. All right. Let's get right into it, guys. Remember, you can start your trading journey if you're watching us for the first time. You can start your trading journey with us by opening and signing up for an account, right? tdmarkets.com, that's the website. Open up an account with us. Just gonna take you 2 or 3 minutes. In fact, under 2 minutes. Let me put it there, under 2 minutes. Quick and simple process. We've got different types of accounts for you. So get in touch with us on the details on the chat, all right? And yeah, we'll sort you out, all right? We also have some education, TD Markets Academy, where we obviously provide education sessions, trading education sessions, all right? We also have that. So if you want to learn how to read the charts, how to become a trader, basically, not only from the charts point of view, but understanding a trader, their behavior and everything, we also have that sorted, right? So TD Markets Academy, you need an account, and once you have signed up for an account, then we're gonna sort you out, all right? So yeah, let me see. Blew my little account again yesterday, 3 years into the journey, and I'm still making mistakes. We win and we learn. Robert, what happened? Excuse me, yo, I've got flu, guys. Right? Excuse me, I've got flu. What happened there? Is it? Let me guess. Is it the yen? Is it the yen? Did the yen? Yo, yeah. In fact, we're gonna talk about the yen. So Robert, I don't know exactly what happened there, but there is a way in which you can manage that, all right? Because if I understand, if someone says they blew their account, uh, it it either means that they over risked on their positions, or positioned, they over or leveraged on their position, or they had no stop losses. That is the only way to blow your account. But if you had stop losses and all of that, then that is not going to be possible. So DXY dropping and went long on gold. Okay, I think there's something very important here, right? There's something very important that, Robert, you brought it up there, and I think it's very important for us just to look into that, because you just mentioned something now that's extremely important. You saw a crash, and then you took a position on another currency because of the crash, right? So there's something very important with what you said there, right? I think let me start with it before we go to the BOJ intervention, to the Japanese yen. Let's start with it, guys, right? So in fact, let me open up the DXY while we're talking about it. Now, here's the thing, guys. So we know that some currencies have relationships with other currencies, okay? Now, this is an education session here. Please pay attention, right? So in trading, we know that there are certain currencies that have a relationship with other currencies. That's why we have something called correlation. So these currencies correlate, meaning that they would move they would both move. When one moves, the other one moves, right? It might not be exactly at the same time, but when one moves, the other one moves. It might be in the same direction, or different direction. But correlation is essentially the relationship between two or more currencies. Okay. Now you are mentioning the DXY. You mentioned the DXY there, right? So wait. So you saw the DXY drop, which means the dollar is getting weak, all right? And then you went long on gold. Gold did go up, but now gold, if you look at the move of the DXY and gold, the move of the DXY was a bit stronger than the one on gold. Gold did move a little bit, right? In our session yesterday, I showed you guys a possible long on gold or a buy on gold, which was this here from there to there, right? That is how gold moved basically, whereas the DXY went all the way down. Now, this is how it goes, guys, right? This is how it goes. When it comes to the DXY is much stronger when you trade it with Euro USD and USD Swiss. Let me type it down. So if you use the DXY as a as a correlation, then you will notice that the DXY is much stronger, or it's gonna give you a stronger move when you pair it with Euro USD and USD CHF. Why? Because Euro USD and USD CHF, there is a correlation between these two, right? They correlate. Even without the DXY, they correlate. But now we know that the DXY measures the performance of the dollar. So what tends to happen is, if you take the DXY chart and the Euro USD chart, and then you flip them around, you will see that is the exact same price action. If you flip the DXY chart around to be the same as Euro USD or vice versa, you will notice that Euro USD DXY shows us the same movements, the same pattern, same movements. But USD Swiss is not the case, but there is correlation between these two. So what I'm saying is this: the movement you saw on the DXY, you would have capitalized it even more on Euro USD and USD Swiss instead of commodities. Right? Why is that the case? Now remember, commodities, guys, right? If commodities were only affected by the dollar, then that would have been the case. But commodities are affected by a lot of things. Gold on its own, not only is it affected by the performance of the dollar, but there are other factors that are affecting gold. The war in the Middle East also affects gold to an extent, right? So the reason why gold did not move as much as the DXY moved is that gold, it's not like your Euro USD and USD Swiss. It's not. Let me go to Euro USD to show you something. Yeah, look at Euro USD. You see this move, right? If you look at the DXY now, the DXY gave us a sharp move, but in the opposite direction, right? Let me show you the DXY. Let me show you the DXY. Look at the DXY. I'm gonna open the DXY chart here, guys. Just 1 second. There we go. I'm sure you guys can see that. I'm gonna go to the lower time frame. Yeah. Just 1 second. Yeah, there we go. Yeah, you see this move here. This is the DXY. Look at this move. And then I'm gonna go back to Euro USD. You're gonna see a similar move. All right, let's go back to Euro USD. You're gonna see a similar move. There we go. But this move is in the opposite direction, of course. That's how it works, right? It's in the opposite direction. And then let's go to USD Swiss. USD Swiss should be to the downside. To the downside. Look at USD Swiss. Look at how sharp of a move we had on USD Swiss. But if you go to gold, the reason why, and listen, I would understand why someone would think that gold is going to move that way. There's nothing wrong in thinking that way. So Robert, I don't want you to think that you are wrong. You are not wrong. Your thinking was right. It was correct. As far as correlation is concerned, it was correct. There was nothing wrong. However, gold is a commodity. It's affected by other things as well, not only the dollar. That's why if you guys have noticed, that's why gold sometimes it lags its movement. So if something happens with the dollar and then at that point in time it affects gold would either lag, it would move later on, or when it moves, it would move and won't give us as strong of a move. I hope that makes sense, right? So yeah, so this is what you need to understand, right? So moving forward, that if you're gonna use the DXY to correlate other pairs, the best combination is this. This is the best combo. Euro USD, USD Swiss, the best combination. You can never go wrong with this. And then gold, if you know, you can still look at gold, yeah, particles, you can still look at gold, but don't expect gold to give you a strong move like that of Euro USD and USD Swiss. But your thinking was not wrong. But now my next question here is that gold did go up nonetheless. So what really happened? Gold did go up nonetheless, right? So does it mean that you over leveraged on your position? Did you enter at the top? Yeah, I'm struggling to understand what happened there now. I'm struggling to understand what happened. Yeah, does it make sense, guys? Are you guys with me? Does it make sense? Yeah, all right. Well, I hope it does. I hope it makes sense. I hope it does. All right, but Robert, don't worry. You see now, you see, as a trader, right? As a trader, that's why you. Oh, there we go. FOMO, you got in at the top. Ish. Yeah, now that's a problem. That's where the problem was, right? And if you don't mind, Robert, I want to use you as a case study, because I believe that what you just experienced yesterday or this week, it's a learning curve. It might be, it might be an expensive mistake that you've made, but it's a learning curve. And I'll tell you what to do to fix that, right? Because as a trader, trading allows us to see our mistakes and to fix our mistakes. But now it's not as simple as it sounds. Not as simple as it sounds, right? So what do I mean by that? Right. So this mistake that you made right now, you see, as a human being, sometimes we take too long to get our emotions in check. Sometimes we take too long to develop a good mindset. Sometimes we take too long, even with our discipline, we take too long, because we are human beings, right? I can tell you this, that there are certain habits that I had to get rid of, and they took me a long time, right? So things like chasing a trade, as an example, chasing a trade, right? Chasing a trade is it's a bad habit. Now, this bad habit, it is, it's like, it is disguised in a suit, if that makes sense. So the bad habit of chasing a trade is disguised in a suit. It doesn't feel like it's a bad habit. At that moment in time, you will not feel like this is a bad habit, but over time, you're gonna notice that it's a bad habit. And by that time, you are deep in it, that it's gonna take you as much as it took you to get out. So what I'm saying is this, right? You see, chasing a trade, guys, is, so let me give you guys an example. Let's go to the yen pair. So JPY, USD JPY, we're going to talk about the yen shortly. So when USD JPY dropped, right? And then all of a sudden you want to get in. Or you want to get in mainly for the reason that you are seeing it drop. Number one, you don't know why it's dropping. Maybe you hear rumors, but you don't know. You have not created a plan. If you jump in without a plan, you are chasing the trade. That's called chasing a trade. And you might be lucky. First few times, a couple of times, you might be lucky. But if you do this consistently, if you keep chasing trades, you will notice how you get burned most of the times. How you would get burned, right? So that is a bad habit that is disguised in a suit. It doesn't look or feel like it's a bad habit at that point in time. But over time, you will notice that, hey, this is a bad habit. All right. So what I'm trying to say is, you see, things like that, sometimes we take a bit of time to get out of that. However, there is a little hack that I'm going to share with you guys, a little hack that is going to help you, right? Robert, don't worry, I got you. A little habit that's gonna help you with that. All right. And not only chasing a trade, there are other bad habits too. All right. There are other bad habits too. Okay. So then what do we do now? What do we do? Ish. You see now, what I'm about to share is exclusive to our TD Markets Academy clients. Ish. Ish. Okay, but it's fine. I'm not gonna get deep into it. So understand this, guys, right? Not only Robert, but everyone here. There's something we tell our clients in the academy, and I like to call it a weekend routine. A trader's weekend routine. Right. As a trader, understand that your life is going to be different from a normal person, because as a trader, there are certain things that you need to do, even if you are not trading, that you need to do that will not make sense to someone who doesn't trade. All right. So I call this the trader's weekend routine. Now, what do we do here? The weekend, guys, is the best time to improve as a trader. The weekend, right? Whether Saturday or Sunday, this is the best opportunity. Best opportunity to improve. Opportunity to improve and prepare for the next trading week. Yeah, there we go. For the next trading week. Now, what exactly do we do now? This is what we do. Every weekend you do about 5 things, but I'm gonna make it very okay but you guys know what I'm trying to write here, right? Best opportunity to improve and prepare for the next week. So now, this is what you do. First things first, on the weekend, the markets are not moving. All right. So you do your market review, market recap, market review, whatever you want to call it. But you sit down, you open up your charts, you open up your trading plan, you open up the news that happened during the week, and then you do your market review. That's it. Market review. Depending on what happened for the week. Like you see this week, tomorrow it's Saturday, right? So let's say it's Saturday today. What would you do? You would sit down maybe in the morning when you have time. I prefer to do this in the morning, all right? I prefer to do this in the morning. In the morning, you take maybe an hour, 30 minutes. You sit down, you look at the charts you are focusing on, you go over your trades, and then you also go over what happened during the week, right? As you go through the charts, there could be trades you took, you lost, could be trades you took, you won, could be setups you missed. All right, that's the charts. And then you also have your trading plan. The trading plan that you used this week, you must have it next to you so that you see, okay, according to the trading plan, did I fully abide to the rules of my trading plan? Did I follow the trading plan? You have it next to you. And then make sure that you have at least a summary of this week's fundamentals or news events. And then you sit down, you check, okay, what happened this week? How would I have reacted better? What did I miss? How did I miss it? What did that mean? And then while you're going over these things, you write them down, guys. You write them down. You don't just look at the chart without anything to write. You write it down, right? Get a journal, write everything down, take screenshots. But the point is to journal everything down. By doing that, psychologically, you are preparing to go to war next week. Monday to Friday, it's a war. In the market, it's a war. So weekends, we prepare for the war. So we look what happened, we learn from this week's trading. Now, this is where you have to be as honest as possible. You see this process now. You have to be honest to yourself. You have to be honest to yourself. Sometimes you're going to cringe and say, yo, sometimes you're going to feel ashamed. That's the journey of improving as a trader. All right, you guys are with me, right? Cool. Market review, you do all of these things. And now, when you do this consistently, right? Every weekend, you do this it's not going to take you the whole day, guys, just an hour. You do this consistently, you will start to notice a change every time, every new week on a Monday, you'll start to notice a change, psychologically so. You will remember the lessons from last week. You will try not to repeat them this week. And then it's a process. Now, you see things like FOMO. Having fear. You take a trade, but you have fear. You close early. You see profits. You want to close early. You see the market. You see your position being in a negative. You become scared. You want to close before the market moves. All of those things, they need a bit of training. Now, this is the training that I'm talking about. Market review. That's it. It gets a little bit deeper than what I'm saying. Like I'm saying, guys, you see what I'm showing you guys right now, it's exclusive to the TD Markets Academy clients, but I'm just going to give like the base of it. But it gets a little bit more than this. But just to give you guys an idea. I stopped chasing trades the day. Okay, there we go. So, okay, we'll go to the markets shortly, right? But yeah, so these little mistakes, right? These little mistakes, you work on them, you improve them, and then when you do this consistently, you're gonna start seeing how you improve. Think of this as driving a car, right? Now, the first day you drove a car and right now, you will notice that there's been a big change, right? How you drive a car today is not the same as how you drove it the first few times, right? Why? Because as you drove on the road, you started learning certain things on the road. You started learning certain things, right? Whenever there's heavy rain, you know to slow down your car. Whenever this and this happens, you know to do this. You see, those things you learn as you go on. And then trust me, the next time you drive a car, trust me, you will never forget those things. Because you know, if I make a mistake, hey, you know, right? So it just needs a bit of practice. All right. So let me just loop back quickly here, right? So the DXY, it works better with Euro USD, USD Swiss. That's a good combination. It can work with gold, but it is not as consistent as Euro USD and USD Swiss, right? So Euro USD, USD Swiss, and the DXY is a powerful combination. Secondly, if you're someone who's struggling with with discipline and emotions. Those things are part of being a trader. You just need to know what to do. So I introduced to you guys a trader's weekend routine. So this doesn't mean that it's the whole weekend. No, just an hour on a Saturday or Sunday, just 1 hour. Find time and then do this. You do this consistently, you'll start noticing changes. It's like a muscle. It's like a muscle, right? So if your muscle is under tension consistently, and resistance, that's when it's going to keep growing. But if you go to the gym just for 1 day, even if look, I don't care how heavy the weights are. If you go to the gym just 1 day and then you never go back, nothing's going to change. So it's like a muscle. It needs that constant tension, So yeah, writing is so important. Yeah, definitely. Writing, everything you do in trading, you have to write it. You have to journal. Journaling is very important, right? Journaling is extremely important. And then it goes beyond that. There's back testing as well. There's what. So those things, we're not going to cover them here. But journaling is very important. All right. So Robert, what happened is part of trading. Just come back stronger. So what I would do if I was you, what I would do is I would not trade today. I wouldn't do anything today. I would even not look at the charts today, right? I would just let my mind calm down. My emotions to calm down, and just I wouldn't do anything. If you wanna look at the charts, you can, but I would say to you, don't place any trades. Just try to relax, right? Take this whole weekend. Monday, let's rock. Yeah. Great stuff. Cool, guys. So we're going to unpack this as we go on, right? So I want to talk about the JPY quickly, right? I want to talk about the JPY because something happened yesterday and the JPY strengthened significantly. It is not your usual movement, this one, right? Now, what happened yesterday? Obviously, I think it was sometime last week, a couple of weeks ago. There were rumors that the Bank of Japan is going to intervene because the yen is extremely weak. I think it hit like a 40 year extreme, right? The USD JPY went to 164, close to a 40-year extreme. So Japan's authorities had repeatedly warned that they were prepared to intervene. Now, when was this? This was a couple of weeks ago. They warned that they're going to intervene. Some of you guys also mentioned on the chat that, hey, look, BOJ is going to intervene, what, right? Right. Now, that intervention, look what happened, guys, right? So this week, there was FOMC. This week, there is Bank of Japan interest rates, which was today. Today. So FOMC was Wednesday. So what happened here? It was so strategic that usually when the Bank of Japan or a central bank intervenes in a situation where there are interest rates, they would generally wait for interest rates to come out and then they would intervene. But this time around, they intervened before the Bank of Japan interest rates were released. Why? Because the FOMC weakened the dollar. So when the FOMC came out, the dollar became weak. And that window between the US interest rates announcement and the BOJ announcement, that window in between, that was the perfect window for the BOJ to intervene. I can tell you this right now. The markets expected the BOJ to intervene, but after Bank of Japan interest rates were announced, after that. So they hit us with a tackle. They caught us offside here, right? They caught us offside because they saw that, okay, a lot of people are shorting the yen. They are shorting the yen. So they said, aha, the dollar is weak from FOMC. Now this is a perfect time to buy the yen. to buy the yen and short the dollar. That's the BOJ, because when they intervene, that's what they do. All right. When they intervene, that's what they do. All right. They would buy the yen and short the dollar. So now that is exactly what happened. And then we saw this drop. All right. Excuse me. So the question then is this going to change everything? Right? The question that you guys have right now is that is this move on the Japan going to reverse the long-term trend? What is going to happen? Well, there's something to consider, right? We need to also to consider the what they call interest rate differential. Interest rate differential, all right, between the US and the JPY. Interest rate differential, because now intervention does not automatically mean the yen has entered a long-term bullish trend. No, that's the distinction we would make. The intervention can change the short-term market structure, but the underlying interest rate differential between the US and Japan remains important. Japan's policy rate is currently 1%. The interest rate came out, guys, right? Let me quickly do this. So BOJ interest rates came out, and then it remained unchanged, 1%. We can all see that, right? You can all see that. So it remained unchanged, right? So the BOJ held the interest rates at 1% today. They are still suggesting that, well, they remain hawkish, all right? Their communication was mainly hawkish, and they suggested that inflation risks could justify additional hikes. So the markets are still expecting another BOJ hike towards later this year. Later this year, right? To 1.25%, but later this year. All right. So a couple of things here. Yes, the BOJ intervened, but the question is it a long-term move? Is it going to shift the market entirely? Right? At this point, it doesn't look so because of the interest rates differential. All right. And so what we are doing right now, what you're going to see right now is the short-term structure, right, that is changing at the moment, but the bigger structure is still intact. So if you look at, for instance, this chart on the daily time frame, you see on the daily time frame everything is bullish. We can take this move and we can say this move and this move are similar. This move and this moves are similar. Look at how sharp the market went down here, right? This was early this year. Look at how sharp the market went down. And look at how sharp the market is going down. So all of these were different reasons why the market went down. But I can tell you that when this was happening here, it seemed so aggressive that you would have thought that this whole trend is changing. This one too, it seemed so aggressive that you would have thought that this whole thing is changing. Now look again, the same thing is repeating again. Same thing is repeating again. So what am I saying to you guys right now? Please enlighten about carry trade. Okay, I'll explain what the carry trade is. Right, I'll explain what the carry trade is shortly, right? But so right now, guys, right now, I think it's too early for us to say this is gonna shift the whole momentum and structure. I think it's early for us to say that, right? We could be getting this. There's two scenarios here basically, but we could be getting a higher low and a continuation up, especially from USD JPY. Why? Because of the rate differential. All right, because of the rate differential. So this is in a nutshell what happened, guys, with with the yen yesterday, right? Were there opportunities? Yes, of course, there were opportunities. All right. So what is a carry trade? What is a carry trade? Right, let me explain what the carry trade is. A carry trade is one of the important concepts that is used in trading, especially from the fundamental standpoint. A carry trade is borrowing money in a currency with low interest rates, then invest it in a currency with higher interest rates to earn the difference. So the JPY has low interest rates. At the moment, the US has high interest rates. So carry trade there would be you would want to buy the currency with high interest rates, but borrowing from the one with low interest rates, right? And then obviously you would want to make returns from that. So that's what carry trade is. Right. So an example would be, let me use JPY. An example would be interest rates. Japan's interest rate is 1%, right? So you would sell the yen and buy the US dollar. And because the US dollar's interest rate is like 4%, right? Let's say 3.7, let's say 4, let's just round off to 4%. So you would sell the yen and buy the US dollar because of the interest rate differential. And then you would earn roughly 3% interest rate differential. Right? So that's why if you look at the historical move of the yen, guys, right? From, let's say from 2011, we can see that more than 10 years, the market has been going up, right? For more than 10 years, price has been going up. So the interest rate differential, yes, it also comes in here, right? Not only the intervention, but also the interest rate differential. So what does this do? What does the carry trade do and the rate differential? Is that the currency with high rates is usually attractive. So then you would find that the currency with low rates, the currency with high rates outperforms the one with low rates. So if you look at USD JPY right now, you see how the dollar has been outperforming the yen, right? There are many other reasons why, but interest rate differential also plays a big role here. This is what happens. So yes, the Bank of Japan intervened. However, we also need to look at interest rate differential, right? The dollar has higher interest rates than the yen. So the yen wants to intervene because a weaker yen makes the cost of living in Japan high. Imports, we know that Japan imports like food, raw material, they import other stuff, right? So now what happens is if the yen continues to weaken like this, those imports are expensive. They are expensive, all right? So therefore then inflation then tends to, the cost of living in Japan will then be higher by default, all right? So that's why they want to intervene, because they're spending a lot on imports, right? They import energy, food, raw material. You see how it is. So the import is significantly more expensive for Japan. Anyway, yeah, so this is what happens with the yen, guys, right? So what are my thoughts? My thoughts is, because I trade the higher time frames, right? On USD JPY right now, this to me is creating a buy opportunity because I'm trading the higher time frames. What I would do here is that I would draw the Fibonacci. Let me show you what I would do. What I would do is I would draw the Fibonacci, and then I would use the Fibonacci to look for a support and a possible higher low. A possible higher low for me to do what? For me to look for a buy. I wouldn't sell this because of the higher time frames. However, if you are looking at the lower time frames, guys, because we trade different time frames, right? If you are looking at the lower time frames, this could be a short, right? This could be a short for you. But for me, it's not a short. It is actually preparing for a long. It is actually preparing for a long. Let me show you guys something. I want you guys to look at this one here. If we draw the Fibonacci like this, it bounced off of the Fib levels. It bounced off of the Fib levels here, right? And then it went up. Good. Let's go to the second one. Let's look at this one here. If we draw the Fibonacci again, it bounced from the very same Fib levels as the one before. So we are seeing a repetition. Now let's go to this one now. Let's draw the Fibonacci. It's bouncing off of the same Fib levels, guys, as the previous two. So what does this mean to you right now? It means the way this trend is moving, when it retraces, right, we are seeing very sharp retracements. We saw a sharp retracement here, which went to where? To 50 and 61.8. This is where it went to, all right, and then the price went up. It did this very same thing, a sharp retracement, which went to 50, 61.8. And now we're seeing another sharp retracement. So this tells you that the behavior of this trend is such that whenever it corrects, it does not give you just it does not usually give you slow corrections. It gives you very sharp corrections, right? Let me show an example of a slow correction. What I mean by a slow correction, I'm talking about and let me see if I can find a good example. Yeah, things like this. If you look at this trend down, right, I want you guys to look at when the market corrected. This is not a sharp correction. This is not a sharp correction. In fact, they look like consolidations. You see that? These are not sharp corrections. So these would be patterns which are very slow. But a sharp correction would be a situation like this. A situation like this. So this tells you that whenever USD JPY goes into a correction, it's very sharp. But it may look like it's changing the trend, but in actual fact, it's not. So if now the market has been retracing to the Fibonacci levels, like it has done here, trust and believe that the next time it's going to correct, it's going to do the same thing by going down to the Fibonacci level. So if you wanted to look for the buy, you would wait for price to do the very same thing here as it did here and here. So if you're looking for a buy right now, you would want the market to repeat what it did here and to repeat what it did here, because that is the current behavior of this market, which can change later on. So hence I'm saying, to me, for me personally, I'm looking for a buy, right? I'm looking for a buy. Yes, the JPY intervened. How long is this move gonna take? I'm not sure. But where it is right now, right? This is where you would most likely start seeing some sort of rebound on the 61.8 golden mean, some sort of rebound. All right, for push towards the upside. So that's what I would look for. So the question is it ready? Is it ready to go up? Well, let me see if it's ready to go up. Well, at this point, what we have is this. We have this rejection here at this point. All right. So a couple of things here. I would want to see price rejecting again. So I would want to see price maybe doing this, rejecting one more time. You see that? I would love to get a reversal pattern here for me to say, okay, now is the time. Now is the time. because this sharp move on its own, sometimes for me, is not enough. But if we get like a double bottom, if you get like a double bottom here, then it's gonna be enough. You know, something like this. Yeah, there we go. Look at this, something like this. This would be enough for me. This would be enough for me. All right, so let's see what's going to happen, but I'm still watching out for this. All right, guys, so that is the JPY. Now, for the people who trade lower time frames, you see this right now. It's a short. If you look at the 15 minutes, the 5 minutes, it's a short. Let me do this. Wait, let me look at the 1 hour first. I don't think it's a short as yet. Yeah, this price action needs to develop further. It needs to develop further, but let's see. Yeah, a short could appear somewhere here, right? A short could appear somewhere here because I can see that we are getting a new structure altogether. A short could appear somewhere here, maybe down to these levels here, down to these levels. Yeah, definitely a short could appear. So we've got that. We need to come back down one more time to here. We need to come back down to somewhere here. Yeah, so there could be like an intraday short here, an intraday short, right? And then we'll see how far it can go for the lower time frame ones, right? But for my time frames, I would wait for a long. I would want to catch the continuation of this. The continuation of this. Yeah, the continuation of this. So I'm going to keep an eye down here, guys. What's going to happen down here? And then obviously you guys, whenever I see an opportunity, you guys will know, right? You guys will know. But yeah, this is how I would position myself. Let's look at CAD JPY. Let's look at CAD JPY. So USD JPY, this is my thoughts on this one. There was a question on gold. Sorry, I missed the question. So is gold retracing or did it just give out from the top, just dumping now? Well, with the current gold price action right now, right? The current gold price action, so we had this move that we spoke about yesterday there, right? Because of this cycle. So at the moment, there is no clear cycle as to where gold is trading right now. It needs to give us a cycle. I'm not going to touch too deep into what the cycle is, right? So gold failed to break this high. It went back to this high. It never broke this high. So what does it mean? It means there's no cycle here. So now what we would do, looking at the 4 hour, the 8 hour, what we would do is that we would wait to see if gold is gonna give us a bearish cycle. What does that mean? It means we want to see if gold is going to give us, yeah, something like this. Yeah, it already happened, actually. You see, as gold was going down, as gold was going down, the next cycle was this one. But it was on the M15. You see that? So this would have been a short going back down to to let me just go to the yeah, a short going back down to these lows, to these areas here, right? You see that with that candlestick. So that would have been the cycle on the lower time frame. So if it does this again, if it corrects again, then it's going to give us another cycle for one more push down. So at the moment, gold would be, the lower time frames on gold would be good at the moment, because the higher time frames, like your 4 hour, the 4 hour gold is trading in the same spot. It's just trading here, right? There's no clear cycle, but on the lower time frames, you're going to find cycles there. So on the M15, if this happens again here, somewhere here, it will be able to give us a short back down to this area, right? So that's what gold is doing at the moment. All right, let's have a look at CAT JPY quickly. So I wanna show you CAT JPY, guys, right? So CAT JPY, let me remove everything here. So CAT JPY, sure, you know, whenever I look at CAT JPY, I get excited because it, you know, even if you started trading today, the way I'm going to explain CAT JPY, you're going to understand it. Even if this is the first time you trade CAT JPY, regardless of this, don't worry about the trend, right? Don't worry about this, because it's been going up. What it's doing right now, it is completing a formation. It is completing a formation. So we call that a cycle. So where does the formation complete? The formation completes when price gets to that high. You see that high? I'm going to draw a line. So when price gets to that high, that's when the formation will be done. So which means from that point on, price can either reverse or it can go up from that point on. But at the moment, the formation is not done, and the formation needs to get done when it goes up there. So what does this mean for you? It means for CAT JPY to complete that formation, it has to go up one more time to complete the formation. It has to go up one more time to complete the formation there, so that it can either go down or go up from there. You hear what I've just said right now? So which means the opportunity is this. The opportunity is right here. That's the opportunity right there. Right there. When the market creates a formation, before any changes, it's going to complete that formation. Before the trend changes, the cycle completes first before the trend changes. All right? So if this trend is going to change right now, it needs to complete this formation. So now there's this opportunity here to go up right there. So even though we are seeing this strong push down, but trust me, I'm not even looking at selling it because of the long term, I would say long term price action. All right. So CAT JPY, I'm still looking for a buy. So what could happen here? Let's see. Okay, it's already gone back down to this low. Okay, so a couple of things, right? So we have this low as well as this low. We've got these two lows, right? So obviously everything is still bullish here. And according to structure, before price continues to go up in an uptrend, what does it need? It needs a higher low. Before price goes up, it needs a higher low. So you see what the market is doing right now. It's looking for the higher low. It's looking for the higher low. That's how price moves. You know, that's why price would move like this. Not in a straight line, but like this. And then in the process, what happens? You have these higher lows. So this is looking for the higher low right now. So the higher low could either be here or it could be down here. It could be there or it could be down here. This is where now we're going to wait for confirmations, right? We're going to wait for reversals, confirmations to show us if we've got a higher low. We're going to look for some sort of a support to see if you got a higher low here or there. So all we need is just a higher low. That's it. Right. So yeah, so USD JPY, guys. Where is it now? USD JPY. This is the long-term move I'm looking for, right? Long-term move. But short-term intraday, it can still go down. But I'm going to be looking for this, right? We are sitting on the fib, on the 1561.8 of the fib. That's where we're sitting at right now. So looking for support here. And then CAD JPY. This one, we're going to need to be a little bit patient with this one. A little bit patient with this one, right? Before we get that continuation up. We're going to have to be a little bit patient. It could go down to this low. We could see it going back down to this low. And it's going to be a nice buy. You see somewhere down here is going to be a nice buy. So it could come back down to this low before it goes up. So let's see if that's going to happen. And there could be some short-term sell trades. Short-term sell trades in the process. There could be some short-term sell trades in the process. Okay, so we've got this structure. Yeah, I think there's gonna be some short-term trades before we get that long. All right, before we get that long. So I've noticed this structure here. And it seems like we are rejecting the structure. I'm noticing the structure. Okay. Yeah, I think for this morning, guys, CAD JPY, it looks like it's still gonna push a bit towards the downside. Push a bit towards the downside here. So it is right now a bit of a push towards the downside. Yeah, that 50. Yeah, we can expect an intraday move coming back down here, and then we'll see what's going to happen here. All right. We'll see what's going to happen once price gets here. Okay. Yeah. We'll have to wait and see. We'll have to wait and see. So, ladies and gentlemen, this is what is happening. All right. This is what is happening. Um, no trades this morning as yet. So yeah. So we're just waiting. All right. We need to make sense of what is happening before we execute. All right. So yeah. So let's see, and then we'll look at the other ones throughout the day. All right. But for this morning, I think we have enough for this morning, and we'll do this again at 12 p.m. All right. I'll catch you guys at 12 p.m. Cool stuff. Cool stuff. Guys, have a good one. Cheers.